FORA.tv. The world is thinking.
There's a book that's been out for a couple of years called Black Swans, which has got a lot of publicity and its author has become quite a celebrity. Black Swans, the title refers to events that are very unlikely and hard to predict and that nobody really foresees, but that have huge consequences. And these events are named Black Swans because it was always assumed in the world that all swans were white until the discovery of Australia, when, of course, the early settlers were astonished to find black swans. The collapse in the US housing market and the recession that followed was not a black swan. I was only one of a number of people who could see that one coming. Years in advance, it stuck out like a sore thumb. It's in the prediction is in that book. I didn't see the full consequences of it. The derivatives market didn't exist in the way it was going to come to exist. So the size and scale of it took me by surprise, although apparently more than it took Alan Greenspan, or less than it took Alan Greenspan by surprise. He said he was watching the crisis unfold with shocked disbelief. So this was not an entirely unpredictable. The core event, the housing bubble and the collapse and the recession to follow, was predictable. Now, based on that credential, let me offer you another prediction, which I think is equally obvious and equally unsurprising should policy not change. And that is this. To defeat this crisis, we've seen central banks around the world do what Alan Greenspan did to defeat the previous crisis in 2001. And that is cut interest rates dramatically, flood the world with liquidity, except on this time it's happened on a much bigger scale and it's happened everywhere at once. At the same time, we've of course seen governments prime the pump with fiscal stimulus, which has magnified the scale of the response. Now, just as excess money always leads to some nasty, pernicious event, just as it was excess money at the root of this particular crisis, my fearless prediction is that unless that excess money is retracted, I mean, at the moment, money in the US is cheaper than free. It's cheaper than free. If you want money from the central bank, it's below. You can get it at below the rate of inflation. So in real terms, you are being subsidised to borrow money. Now, unless those liquidity conditions are changed and unless that excess liquidity is retracted quickly, as soon as recovery gets underway, then I don't know exactly how or where that excess liquidity will manifest itself or exactly how and where the next crisis will emerge. But unless that happens, then we are already building, in fact, we have already started the next crisis.